Hi guys, good morning everyone again. Let's grab us some charts. I don't know why GU is here, but I'll fix that. There we go. Fixed. All right, so I'm gonna try to keep everything we do going forward on this template so that the analysis stays. I'm gonna start with the one thing I rarely ever do, which is higher time frame top-down analysis, just to make sure everything is on the safe side. Templates on. All right, some persons are asking about the template. I will check. I'll let you know if you can get it before the end of today, if you don't already have it, that is. So from yesterday's video, if we take a look at this chart and we were to try to identify what would be a nice dealing range for the monthly chart, we start off with definitions. Where was the last place that we saw the monthly chart running above a previous month high and the previous month's low? So keep it real simple. Based on what I'm seeing, this is the highest closing monthly candle right here. And no candle since this one has gone above another monthly high. So tag that as the high. And now, when did we take previous month's low? Took previous month's low here. So this could have been a range. Took previous month's low here again, and then all of these guys coming down has been taking previous month's low. So if you're using anything along this side to frame a range, that range that you frame is going to be used in the future. Because again, this is a monthly chart, so it's going to take a while to play out. What we can do is we can look at this high here, and then look back to see when did we take previous month's low before we took previous month's high. The first candle I'm seeing is this one right here. So here's a price swing that took previous month's low, previous month's high. So there's no, what do you say now? No ambiguity in selecting this. It's just what we see. We're not form fitting anything. It is what it is. Now, once I have that, we can go to lower time frames. All right, so let's go to weekly chart. And we're going to the weekly chart with the premise that here's our range. Now I can refine these because the monthly chart usually starts the lines at the exact start of the month, but I don't want it here. I want them to be refined. So now we're looking at this. Do we have validation here that this was indeed, one sec, a dealing range? Did it take previous high and previous low of a particular range? Yes, it did. I'm seeing short-term high right there. And I'm seeing lows right there getting taken. So I'm perfectly fine with this definition. Now, for trading purposes and by my model, I'd be looking inside the range that was just rated. And since I'm bearish, I'm looking for the highest closing up candle. This one, tag the opening price. There we go. So I'd be looking for a short at that candle after the range has been created and a shift in market structure has been confirmed. So if possible, see if we can go back to this week. I don't think we can, but I'm going to try nonetheless. Try to go back to this week right here, the first, and frame expansions lower on a weekly, maybe a daily chart or hourly chart if possible. How we could have gotten involved here and what would have been logical areas to target. First target that comes on my mind is the fractal here, failure swing. And let's run over to wherever that was in time. There we go. So now looking at this time frame, and we're starting here, we're looking to see, do we have a market structure shift on this time frame that supports a run below this low? We have a range high being created here. So on a fractal nature, what we have is this low, that high. That is also dealing range. So as usual, we go back here. This is my highest closing candle. Let's tag the opening. I'm looking for shorts here. Broke low. Range has been violated here. So this is now a stop hunt. This is my range. Fib this range. Automatically, we can see that this is coming in somewhere about 50%. So we could use this to frame a trade idea. At or above this line, I'm gonna go short. This wouldn't have been a trade. Well, it would have been a trade using the model, but I'm sticking to the dealing range logic. We broke below the dealing range here, so market structure shift. The objective has not been met. So at this point in time, we have the range, we have a break out of the range, which we assume is targeting this area. The break out of the range does not get to the objective. So when price retraces back inside the range, I'm looking for bearish arrays to support a push lower. Listen to that part again, you'll probably say, aha. So this range right here is what my focus is on. We broke out of the range right here. I'm looking for retracements to support going short. Price rate up. We're looking at that line, we're looking at imbalances, looking at anything inside the range that could potentially be bearish. Nice short idea that goes down to here. Now, for rule number 7, for the guys who have paid attention to that a lot, take a look at this. A range is created. So if the range is created, we know that liquidity rests above and below the range. We break out the range here, which means that this run is taking liquidity. Based on rule number 7, once we have a price run that takes liquidity, the imbalances in that price run lower is not likely to support a break again lower if that happens, right? So this run takes liquidity, price retraces. I'm not expecting a fair value gap here to send price low. So we're approaching the market with that logic in mind, or well, we're talking about it now since you may or may not have been familiar with it. So here's the run. If this trades deep into discount, premium, and I get a reaction low, the only thing I'm focused on right now is I already expect this push to not break here. I expect this to fail and break here and not break here, which means I can anticipate the delivery of price between that low and that high. I can, or at least try, let's not hold anything to 100% here. I can try to anticipate the delivery between here and here. So price trades up. Liquidity is now internal. We have the range right here. We have 50% of the range. Everything up here is premium and fine. Price trades up. I assume that it takes liquidity, but why assume when I can check? Relatively equal high has been created. Thought I had everyone muted. Slipped up. There we go. Let's fix that. So premium end of the dealing range. Relatively equal high has been created in the premium end of the range, which means liquidity is now resting the premium end of the range. Our bias is bearish because the market broke here. Well, here. We already expect that this first push or retracement is going to fail to take this low. That's what happens when price trades up to grab this liquidity. We now support a long-term push to break outside of all of this. So now when we look at this, this makes a lot more sense. I think it makes a lot more sense. Price trades up, we break low, we're gone. Speed, all right. Now yesterday we talked about two small trading ideas, R3. And the market looks like this, and we have a range. If we have a raid inside the range that does not break that high, we're going back to this candle right here. We're anticipating that run. So now with that in mind, let's take a look at the fact that we have a range created here. We have a raid inside the range that does not break above this high. Well, sorry, not break above that high. So we're now looking for the short-term swing highs inside here. And once we close below those, we're expecting retracement and a short. So now this should stand out right there. Short-term high, price runs up, raids, doesn't break here, break below, that's a short. This is happening inside that week when we are expecting price to be bearish. So if that was the start of the week, 5 days later, this is Friday. High of the week formed on Thursday. Price trades lower, cascades to target. I'm just going to put, I'm assuming this is a Monday. I don't know why, I just want to assume this is a Monday. So this is Monday. This is Tuesday, Wednesday, Thursday, Friday. So the new week starts here. So this is Tuesday, Wednesday, Thursday, Friday. There, we'll stop there. And then if the feed permits me, I want to go to a 1 hour chart and look at that portion of price action. No, what did I do? Did the wrong thing, guys. 1 sec. Let's hop back out to the daily. Let's take the shift off, scroll over here, click H1, and should be somewhere around here. There we go. So that's the first week. This is the target. And this right here is the, let's call it daily open. Very horrible. But yeah, that's a candle on the daily chart that we're looking at for price to form the entry there. So this is our trading week. If that's our trading week, we could do a lot of things inside here. I'm going to leave most of that to you. Let's zoom up inside this a little bit. So we have Monday's trading here. See, can we split it? Yes, we can. So here we have Monday's trading. This right here now looks like something that we should all know. The gift from ICT called what? Anybody wants to unmute and be a scholar? No. So I was joking, nobody? Purge and revert. Perfect, that's it, Ralph. This is ICT's purge and revert. Now, I don't currently have a way to anticipate purge and revert. It's just something that you have to watch and anticipate this part. Once we have that run below the daily lows, the day that does the running below the lows, you watch that high. When the market goes above that high, it doesn't need to close. Once it trades above it, then your purge and revert ideas are hot. So now we're looking at where could the market retrace to after running this high. I was about to say something then, but if I said that, I can't put this on YouTube. So when the market's retracing, it's always seeking some kind of a raise. If you know what those arrays are, take a look at them when you find them. But let's approach this fractal on the idea that the market's running out liquidity. After this happens, we trade above here, your bias is now bullish. You're anticipating where could an entry form. Liquidity being swept. There's your stop hunt. This trades up to take liquidity. This trades down to take liquidity. So we have our range. Now, if this is our range, right there, and the market trades down here to grab liquidity to support a bullish push, once this happens, you likely may not always, but most of the times you will not see price coming back down here unless the move is a sustained move higher. So if this market was underlyingly bullish and we had purge and revert, once this breaks up, we're looking for continuation moves inside here to go higher. So let me say that again. Once we're looking at the purge and revert and the underlying market structure is bullish, when we have the opposing stop hunt to the downside, that's clearing liquidity, that run higher may not come back to give you an entry. Why is that? Because this is where markets are going to grab liquidity to take it to this level to pair, and then we go lower. So this is a book to grab longs to go short. If the market was underlyingly bullish, when this top one happens and it breaks above here, I would reasonably expect fair value for longs inside here and then higher. But this market is not bullish. So at this point in time, after the stop hunt, we want to know where's the upside target. This daily opening price has already been tagged as that. It coincides with huge CB. So we could put our fib on, mark out the CB, mark out 50%, anticipate at most that level to get tagged before we go low. Now at that point, at this point in time, when the market has done the stop hunt and run to the objective, in an underlyingly bearish market, imbalance is created between those two arrows, or these two arrows right here, are not expected to hold price or act as support. All right, so that's how I interpret the market. I'm looking at it like this. When this run happens, the imbalances created here should not support price when it's coming lower if the underlying market structure is bearish. So what I do is I look at the fair value gaps here and I anticipate them to show me when the market structure has shifted. So let's grab a box. Let's get gray inside the box. Let's mark out imbalances like here. So we're looking at this. Once we close below this on this time frame, this is the analysis time frame. This is where we found the FEG. This is where we found the structure. Confirmation comes from this. Early confirmations can happen on a lower time frame, yes, but this time frame is where you invalidate the setup or not. So when this candle closes here, below the imbalance, my bias for going short is confirmed. We could always drop to a lower time frame and look inside here for something else to be spectacular, but it's the narrative I'm trying to, or the narrative portion of my process, right? That's what I'm trying to communicate here. So at this point in time, when this candle closes, this is midday on whatever day this is, on a Friday, we're bearish, or my bias is confirmed bearish going into the next week. Let's say that. the objective for downside has not been met as yet. That's the level we took from the daily chart. So at this point in time, I'm now framing a trade idea from this fair value gap down to that blue line that's somewhere. So now let's take a look at how that played out. This is a retracement. Everybody knows what this entry is already. And then there's a run low. Where's the blue line? Oh, it's so far away. Very far away. Okay, let's go back. So if at this point in time, I'm bearish going lower, and this point here confirms my my decision to be bearish. Retracements that I'm going to be looking for should come at least to this candle right here, these inside here. So let's put a line there. Now we're having a lot of lines. Don't need this anymore, so let's take that one off. I don't remember what this one was, so I'm going to leave that. I'm going to extend this range through here. Like that. So extend the range through here. It's a range still. So that to here, that's our 50% coming in right there. That's our 50%. So now going into the new week, I'm already anticipating possibly where the high of the week could form. If the market opens, trades above here, I'm looking at inside here to frame the high of the week, then we drop. If not, I'm looking for a market to do what it does, create a Monday range, Tuesday takes it, Tuesday high of the week, and then run. For precision purposes, of course, we could always refine what's inside here. And for bonds, let's do that. I'm looking at this black line right here and this red line here, the upper 50% of the dealing range. What's jumping out at me? Up candle. Right there, up candle opening price. Right there. So I have everything I need now to frame an idea to go short. On Monday, market trades up, fails to get to here, but it suddenly stops at this random red line. Coincidence. Trade above it, towards Asian, broke below, all the good stuff here. If you see this fractal inside here, then wink, wink. Breaks back inside here to here and go lower. The projected high of the week, or the projected level that we expect the high of the week to form, held. That would have been a nice trade. Can I get a 15-minute chart? Can I? I don't even know what day it was. Bam, 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 bam. Bam. Was that far back? Wow. Okay, here we are. Zoom out a tad bit. Oh, slow down there, boy. So this is now a 50-minute perspective. Close enough to the 5-minute. I don't think the data will go back as far as 5. Here's a refined view of everything that we're just talking about. Zoom up a little. Here's our 50% level. Here's our order block. So the order block looks like. Now, if you want to refine again, that's because that's all the 50-minute time, the lower time frames are for, refining for entry. Here's the order block that we're looking at. All of this gray box here. The range of that is 83 points. There's no way in hell I'm going to go short here with an 83-point stop. So I'd be looking for logical areas inside here to use and refine my entry. Now, I'm actually going to try to see if we get the 5-minute chart in a sec, but this structure right here looks like this. on a lower time frame. A 1 minute or a 5 minute would look like that inside here. Which means perfectly fine. So if that's the anticipation, I'm going back to the highest closing up candle before the raid here. And I'm finding the opening price of that candle. Let's take this off now. Then we have short-term low right here. Price broke through that short-term low right here, order pairing low. We have 3 lows inside here. This is the lowest one, which means this right here is the stop hunt. This is the failure swing. If this is the failure swing, and this is the candle that broke below the failure swing, order pairing is happening. That candle's low. This candle's close. This is where the entry should form. Here's Monday. You can start, get pretty now and put some time on this. First one is, as usual, London. London range is here. So we have that from London. 8 a.m. is all the way down here. 8 a.m. is all the way down here. Now, again, I don't remember what this line was for. Maybe when if I rewatch, I'll understand what I was trying to tell myself here. But we had a run here that takes liquidity. Asian liquidity is taken. London creates a huge swing down. We're already anticipating the high of the week to form up here. We're below that level, below the weekly opening price. So buys are fine. Before we take a buy, we need a market structure shift. Now, if you remember what we talked about in the early part of this video, when we said that if the underlying market structure is bullish and we have a dealing range, we get a break of the dealing range, we anticipate discount retracements to run higher. This market structure, higher time frame, is bearish, but we are below an objective that we're looking for. We're way below the range. So we're anticipating a run back inside the range, which means the delivery below all of this, as a matter of fact. Once you get below this, the range low here, we're looking for a bullish delivery, not a bullish bias, not a bullish order flow, but a bullish delivery to pair the shorts so we can continue going low. This is the last time in London buy side was taken. Sell side is taken here, which means that right there is our good old friend, Mr. Dealing Range. At 50% of the dealing range, we have a huge BC, or a huge candle with a gap, right? Not confuse myself. We have the market structure shift here that I'm sure you guys can see. Reason to go long. Reason to go long. And what time did this happen? 11 a.m. London close profit taking. Suspicious. 1:15, which is right after lunch. Same fractal is happening right here again. This larger fractal, and there's so many lines now. Let me take off some of them. This fractal here, low, range, raid, retracement, low, raid, inside the range. Now this retracement here, there's no retracement after price run here, or it did, sorry. After a run here, we had a retracement. Now this retracement makes sense since the delivery here is bullish. And what I've seen is when the delivery is bullish, and we have a break of the range, we usually get deep retracements, and then price continues higher. So just for bunts, if I was to fib, that range right there. Here's 50%. Look what's at 50%. Pretty sure if I tag the open price of that candle. Wrong one. Open. Wait, what am I touching? This won't behave. So I gotta do it manually. Open price of that candle right there. That's everything we need to go higher. So look at the delivery again. Look at the narrative. Look at the delivery. Price trades up here. There's a gap. So I may have mentioned this before to somebody. I'm not sure who it was. About whenever you create a whenever you see a swing high get created and price is moving away from that swing high, you want to look at the delivery of price away from that swing high. The only reason we do that is we want to anticipate if there's a reason for price to come back higher after we get a market structure shift. An imbalance is there. That's reason enough. All these random levels are showing up for work. Top. Huge displacement from a random level. Look at that. We could factor in time to do the rest. So this is another video of me trying to communicate the process and make it generic, as generic as possible. It's the same thing we're doing over and over and over, and it doesn't matter the time frame. The more you practice, the more you get comfortable with it. Hindsight, forward sight is not a thing, but whatever it is what it is. Real quickly, just to take a look at some live market data. Look at this fractal here. Same idea. Now the question is, the fractal by itself is just a pawn. Is the delivery bullish? Is there a need for the delivery to be bullish? Is the higher time frame bullish? Can I expect a retracement inside here? If I do expect a retracement, where would it come to? Questions that you should always ask yourself. But this is a nice fractal of London, New York. That's nice. If I was looking for a retracement, I'd be looking inside here, below this. You can't rewind a Zoom call, guys. I'm sorry. But this level looks like where liquidity would be resting in this delivery for me. We're continuously breaking highs. So I would like that. And then I'll go long. I think what's also supporting my idea of going long is if I clean this all up, I will go to a daily chart. For this week in particular, I was looking at this here to form the low of the week, and then we push. So now that we have the liquidity here, the FEG has been formed. I wouldn't mind 930 low here, and then price pushes higher. So with that in mind, if we get that deep retracement I'm looking for, I will be hesitant to just fade it. Just fade I'll be very hesitant to fade. What was I about to say again? The fade this top point. Somebody's drawing. Yep, I mean, perfectly fine. I can see it because the day opened with a little bit of gap right there. So a little bit of gap that we could, well, this is the week, I think. Not sure. Just looking at the price action. 8, that's equilibrium 2. Oh, interesting. So let's see if we can fail right here and then drive low. This fractal here supports the idea of this low stopping price, because this is the last low before, and this is that stop point. right there. So this just it's a draw for me. Automatically becomes a draw because of this fractal. Automatically. And a 5-minute chart, it's all the way down here. So this is what I'm saying. I'd be hesitant to just buy when price comes back inside here. But if it does this, or it goes through but doesn't close below there, I'd still be interested in going long. So hopefully this one was very engaging. If we do another one, we'll just look at live market data for today and what's happening and some of the things that we can expect. Or we could just come back at about 5 minutes to 9:30 instead 9:25 and look at what's happening. All right, so until then, peace out, be safe.